What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events, get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide technical analysis on Sundays, as well as a daily pulse on the market on X at Hemi137. So you can check me out there as well. But being said, we are headed towards the end of the year. We only have a couple days left. I have taken this week off, or this previous week, as I've been traveling. But with that being said, we are back. We are full force. We are getting ready for 2025. There is a lot occurring that we need to be paying attention to as we prepare for 2025. And that being said, we don't really have a lot scheduled, especially as to this upcoming week. But as soon as January hits, there is a lot of potential events that could start occurring that can have a dramatic impact on the market moving forward, especially over the next year, year and a half. We have a lot of things that are going to start unwinding. And I've talked about a debt bomb that is ready to go off essentially at this time, some point either next year or the year after that. But ultimately understand that, again, things can't continue on the same pace that they are. With that being said, let's get into some of the news and recaps over the past week. A lot of this is headline news as of right now. Well, maybe not particularly headline news, but important news that we need to be paying attention to that has a direct impact on the market and could potentially cause some major volatility in the market. So, something we talked about is Yellen. She did apologize for the massive debt bomb that her and her accomplices have essentially created over the past couple years. But she says currently expects to reach a new debt limit between January 14th and January 23rd, at which time she will be necessary for Treasury to start taking extraordinary measures. Now, what exactly does that mean? And it seems extremely cryptic. First of all, Trump has already asked to remove the debt ceiling in general over the next 4 years, as he plans to put in some different policies. This is why it's important to know the different policies of the president or president elect that may be coming in, or candidates that may be wanting to come in, because you need to know how it's going to impact the economy in general. He's talked about tariffs, he's talked about removing taxes, and to understand that whole plan or concept, you do need to understand what is exactly going on with that aspect of essentially applying a tariff, which does increase inflation. But on the same token, if you are reducing taxes as you are removing government bloat, that will directly impact and allow essentially people, the Americans or taxpayers, to spend more. So on the same token, that tax that essentially tariff cost will still be dramatically reduced compared to what you're paying if you take in consideration the amount of taxes you are paying. So with that being said, again, still very cryptic message on extraordinary measures. Now, one thing that has surfaced before in the past was that the U.S. Treasury could create a $1 trillion coin, essentially, that could pay off the debt, which is wild to think, but something that's been floated out there throughout the years. And so, with her saying that it takes extraordinary measures, means that they have been doing a lot of quantitative easing on the backside to bail out banks. And she's saying that's not going to be able to be supported in the this upcoming year or two, or this next election. That could be very troublesome for banks, and that could be essentially the collapse of the banks and bank runs, which is something they've avoided over the past year and a half. That started a year and a half ago, and something we have seen exactly in China is they've had issues with their banking system, especially when it comes to mortgage loans. They had their own essentially 2008 crisis with a couple of, again, their lenders out there, only to find there was a lot of corruption that's been unwinding. They essentially put any trading on these institutions on hold for over a year, only for them to open up down 89%. So, again, a lot of concerns about her cryptic message that came out yesterday. But again, that's what we are kind of thinking what could potentially play out there. But with that being said, credit card debt hits all-time high in correlated with recessionary environments. So I got like a two-part statement there, but ultimately what has been happening is we've hit new credit card high limits, which is something, again, people are running out of money. And again, because of the massive spending on credit cards just for basic necessities, you understand that these credit card debt limits have been strongly correlated with recessionary environments. And again, we are at all-time highs, and we are at some of the highest levels we have ever seen. And something I've talked about before is I've always talked about how there's massive manipulation to essentially get your votes. Now, with that being said, you have essentially had this current administration starting, since the election has been over and finalized, that they are setting up for the current administration taking over by massively spending. What comes with massive spending is essentially massive inflation. So not only have the current administration been sending essentially almost every other day, send billions of dollars to Ukraine, essentially, which in turn they turn around and buy weapons from U.S. companies and also get kickbacks to the Democratic Party. There's been statements about this. Whether how true that is, I believe there is some truth to the source. But ultimately, that being said, you're still spending billions of dollars. So you continue to have an outflow of cash that's essentially causing inflation. And with what's currently going on, and why this is important is the fact that what you're seeing is we've cut 100 basis points over the past, over this past quarter. And we're already starting to see inflation start to pump back up. It has nothing to do with the fact that we've cut rates, and that's what is important. Rate decisions, rate cuts, rate increases, any kind of actions done within rates take months to play out. So the fact it's already increasing at a rapid rate is largely due to the fact of the wild spending. Again, there's massive billion-dollar packages that keep going out every other day from this current administration. They're wildly spending on all different other kinds of programs. And then now you have the IRS sending out $1,400 stimulus checks to 1 million people who qualified for them back in 2021 who never claimed them. Now, this has been a huge problem in massive waste of spending for a lot of these stimulus checks that have gone out. So you're looking at over $1 billion here of money that's going to be pushed out to everybody else. For what reason? What is the necessary reason for us to continue to spend wildly out of control, aside from setting up the current administration and having to deal with what's going on with inflation? And understand that, again, Treasury can't continue to bail people out. Yellen knows this. Fed Chair Powell has been talking about this as well for quite a while, is that you can't sustain this wild spending. But to cast blame so you can get a vote, they are setting it up so this current administration fails, and is going to fail horribly bad with this current setup, this debt bomb that's currently portraying. Because what exactly happens when you have high inflation? Tech suffers badly. We saw this in 2022, is tech essentially fell off of a cliff. And what is also correlated and runs together is Bitcoin. And Bitcoin has had quite a run, where you have been essentially in a bull run over the past about 2 years, since 2022. And now it's going to start cooling off. So to think that we're going to just continue to push up, I think, is wildly misleading at this point. Although I do believe we will have a massive bull run cycle after this, but you need to reset the clock. That is the problem. Your Mag 7 have essentially been holding up the market to this point. That needs to change. We need some relief on a lot of these massive hikes that have currently been going on. And so, AKA, you introduce high inflation, tech is going to get absolutely cratered because of high inflation. Now, largely, we need to pay attention to, again, springtime is typically when you have the highest inflation, plus the inflation over the winter time as people continue to try to heat their homes. So you have a lot of different aspects that could lead to some wild inflation, at least initially. Because once you put a cap on everything, then that's going to be a problem. And the fact that they're not going to work with this up and coming administration could be largely concerning, because you can't keep spending you might get a huge spike in inflation and then massive drop off, especially not even considering that people are losing their jobs left and right. And if you lose your job, it is extremely hard to find a new job. So, and some good news that came out is it was a great year for billionaires, especially these fortunate few who together got more than $700 billion richer from Forbes. An article from Forbes essentially said that again, that 1% has gotten $700 billion richer. While homelessness hits record high this year amid affordable housing shortage. So you're getting more and more people who are losing their jobs. We've talked about before this is all played out that a lot of their wealth is tied up in their home. So that's fine. You can overprice your home, 3, 4x, sell it. But now, how do you qualify for a new home? It is extremely difficult with a shortage because now you, as the buyer, is essentially screwed yourself out of a deal because, again, people, when you're looking to buy, people are looking for the same kind of deal, but now you have a massive pool of people trying to buy because they can't get a home. And then you're going to massively overspend. And it leads to, and then not only on top of that, you're not even including the rate on top of that, which even though we've done 100-point basis move cuts, that still is not stopping house, essentially home loans to continue to increase. And so that is wildly the biggest problem there. And now you have 36% of Americans 65 or older having 50K or less in their 401k. So the biggest working class out there is having issues. We've talked about a lot of adult parents are moving in with their parents. And so this burden and strain has been put on them. And so a lot of them, any kind of inheritance that they may be giving their adult child, they're doing it now because, again, a lot of adult parents cannot afford a loan from the bank, especially at these rates. And not just the rates. I don't think the rates would be a huge problem, but the big problem being is that what you're seeing is the prices. If the prices weren't 4 times as much, people would be able to afford a 7% interest rate, and then because of the prices being so low, but that's not the case, and people continue to price gouge. Now we've talked about how we had to wait to the election before people were willing to move. And we've seen that thus far. But again, the longer and longer you procrastinate and push this thing off, the worse and worse it's going to get. The more jobs are going to be, more people are going to get let go. You're going to have more supply shock issues. We are starting to see change in home prices. It's slow. Now you have to remember, even in 2008, what happened it was largely the sum of the price of homes. Right now, the price of homes has been over 400,000, and what we're seeing or we're getting into is home ownership is now considered a luxury. Existing homes are now selling higher than new homes. This is something we see with used automobiles, right? Is the used automobiles, because of the lack of supply back in 2001 during the pandemic, it has essentially caused a massive whirlwind and caused people to not pay as much or overpay for used vehicles as opposed to new vehicles, even with all the incentives that are going on. So sales are set to even hit a lower during the 2008 financial crisis. So things are getting bad just on the home ownership front. And the automobile delinquencies are again another big thing that's been a huge issue. So you have two massive debt issues. People can't afford insurance because insurance is unaffordable, and a lot of these companies just don't want to be paying out. Again, you're supposed to be in the market to be helping people out with these insurance companies, but that's just not the case. Again, they want these wild profits to essentially cover their basis, and again, that is largely again due to inflation as well. And so you're having this massive issue that's unsustainable. You continue to push this down. People just can't afford to live, and they're working 2 to 3 jobs, and it's still just not enough. And this is why we've seen the billionaires get richer, and again, that big working class that's supposed to retire over the next 10 years, you're going to see the massive transfer of wealth. But what's happening is, instead of that being inherited and potentially put into Bitcoin, because the newer generations believe in Bitcoin, that's being essentially sucked up from a lot of these billionaires and these large corporations. So again, why Doge will be important going forward, and what actually the outcome is that over the next 4 years. So that being said, you have over 60 publicly traded companies collectively holding 591,368 Bitcoin. So you have the U.S. talking about essentially developing a strategic reserve, which again, they're not going to be buying at all-time highs. They will be buying on the bottom, and there will be a structured event to be able to do so. You have companies that are doing the same thing. You have states that are building reserves as well. So you have a lot of different hands in the pot trying to get into crypto. Now, crypto isn't going to save everybody. You have to understand in any economy, when things are bad, everything will crater all at one time. Gold, oil, um, companies, stocks, it doesn't matter what it is, crypto, all of it will come crashing down at one point. So you have to understand that's the way the market works. It's not just it's going to detach itself and then that's how it works, right? You have to understand again, when there is massive panic in the market, everything sells off. And again, one of the biggest reflectors is your zero DTEs, so your 0 days to expiration options, are now reflecting 50% of total volume, which is a record of 48 million option contracts traded per day. So again, people are very much in a gambling aspect. They're using leveraged contracts to try to make money from what the little that they have left, in hopes that they can try to get themselves out of the current situation that they are in. So, with all that being said, again, a lot of information, but two of the biggest things I am watching for with all this, well, that all that we've just gone over, to kind of solidify that, there are two major things we need to be watching for. And the first one being is that what you're looking at is Bitcoin, and the Bitcoin reserve is one of them. And I just talked about this. Again, if we are going to create a Bitcoin reserve, the government is not going to be buying at the peaks. There will be a manufactured event, which we are starting to get some events already. Bird flu seems to be one of them. And now it's again just yesterday coming out that there's the first human case of bird flu. Again, a lot of these things seem to be recycled over and over and over. But with that being said, what we're looking at here is we need a manufactured event. If we get a manufactured event, you could create a Bitcoin. And what could you do? How could that be possible? And to be able to make that possible, what you would need is high inflation, because again, high inflation correlates with big tech and Bitcoin getting cratered because of that. And then next event being is the quantitative easing, something I talked about. Every presidential candidate wants quantitative easing because it essentially will create a bull market, and Trump is very much about a bull market. But to be able to do that, you have to have the right situation, a current economic environment to be able to do that. And that would essentially mean that you would have to manufacture an event to occur so you can quantitative ease. In the current economic sediment, your inflation is running too high. You're essentially getting in stagflation. So inflation is still too high. Things are still too unaffordable. People are still losing tons of jobs. You are essentially in stagflation, which is probably one of the worst potential situations you are getting into, while you have a government that's continuing to just wildly spend to put us in a bigger hole and a bigger problem moving forward. So you can expect to build a strategic reserve. To do quantitative easing, you need a huge manufactured event to occur, that's going to reset essentially the current economic environment, drive enough fear to drive demand down. Again, the actual excess cash that we have is extremely limited. So that is one thing that you have to keep in mind moving forward, is we are going to have to focus on that to be able to get anything done in general. So with that being said, let's kind of look and see what we got coming up this week. Again, those are the two big things I am watching this year to play out over the next couple of years. Ultimately, I think it's going to happen a lot sooner than later. But again, this is why I try to have a short-term view on what I believe is actually going to occur, and then look at the smaller events that are occurring over the next 2 months, to kind of see how that plays out and if it continues to tie into my thesis of how things are going to play out. And then again, we adjust risk based on what we believe is going to happen. I believe you should always take advantage of equities out there or cryptos that are heavily discounted or undervalued at any point during the cycle. Be mindful that during certain high peak times when there's more risk, that at that time, just be mindful that you may have to continue to DCA into positions because of a potential sell-off. So have some sort of powder to be able to do that. And then this upcoming week, considering we're still going on during the holidays, we will have the first, so the new year will be off again. So just keep that in mind. That's ultimately what we got going on. Again, there's going to be data sets that always come out. There's nothing really mindful, in my opinion, that's coming up. I think, again, the two biggest events coming up in January, a lot to do with the inauguration, the presidency, port strikes is big thing, student loans, big thing. You have all these things that are coming due here in the new year. So why it also leads up to the major event. But again, this week, all we really have is the market's going to be closed on Wednesday. So just keep that in mind. And then our next monetary policy is until the end of the month. I believe, again, reflecting back in 2008, they did emergency cuts earlier in the month. I think once a lot of the stuff, again, the official numbers for unemployment will start coming out as well. So you have a lot of stuff just offloading in January in the first quarter of this year, plus really bad earnings. In my opinion, is what's going to happen because, again, people are putting everything on credit card, buy now, pay later. You're not getting any of that data. So there's a lot of things that just aren't an accurate representation of what's actually going on right now. Then you have core inflation, which is going to be important because inflation is starting to rise. Again, if inflation starts skyrocketing over the next 2 quarters, you may start to see tech and, again, Bitcoin crater at that point before you get into any kind of continued massive bull run, which I think you'll get into. But again, you have to let this debt bomb unspiral from itself. Maybe that takes another year. We're not really sure. But we do know there's going to be a lot of handcuffing coming into these next couple of quarters, which is important. So we don't, again, know exactly when it's going to happen, but we can assume, given off of probability and cycles, that when it might actually occur. Now, upcoming earnings in January 15th is when we really start getting stuff. Again, I've been talking about this essentially on X over the past week and how important this is because I've talked about how strategic placement of earnings is important, especially after SVB. What we've seen is banks essentially shifted to Fridays. If something happens or reports from these banks, you have to understand how the limit downs and limit ups work. So when you have about 7% loss in a stock or index, the market will essentially halt for 30 minutes on that stock or index, and then it will reopen and continue trading. If it again falls or climbs 7%, again, you will get another halt. If it does it for a third time, trading for that stock or index will completely shut down for the remainder of the day. And typically they were doing this on Fridays after SVB so they could take it into the weekend, address it, create some bogus package to help provide liquidity for banks is what they were doing. Now it's all shifting back towards the middle of the week. So now you have multiple days before you get into the weekend to address anything. So you can have multiple days of selling, which is largely a concern. And understand how that will play out is that you can't just close up shop in the market and then just take it into the weekend. That's just not going to occur that way. So now, again, we are pushing all major bank institutions to be reported on a Wednesday. So you got 3 days to potentially have massive selling on the market before you can really address anything. So that is something that I think is a very critical piece of information that is coming out in this new year. That Wednesday on the 15th, we will have JP Morgan, Citibank, Wells Fargo, Goldman Sachs, PNC Bank. And then on Thursday, Bank of America, Morgan Stanley, US Bancorp. See, now all these, what we had previously on the Friday was it would be JP Morgan, Wells Fargo, BlackRock. And then the following week on the Tuesday, you'd have Bank of America, or the following Monday, you'd have like Goldman Sachs, Bank of America, Morgan Stanley on Tuesday, and USB on Tuesday. So you had a more of a smattering and separated by, again, the three industry leaders on a Friday to kind of help digest and stop any bleeding before Monday came back out for some of these other higher risk banks to start reporting. So that is, again, a huge thing to be watching coming into the year. So expected moves for this week, we got an 82% move. So again, the general index is a little bit higher than normal, not wildly higher, but there is anticipation because we are getting into a new year. We are seeing some selling off over the past week. That's something to keep in mind. I think a lot of it is more so just positioning than anything else. You had seen some massive selling in 2007 going into 2008 before we started wildly selling heavy. That could be what's going on there as well. But ultimately, right now, this is pretty normal. You don't really get a Santa Claus rally till the January, the first 2 weeks of January, just before the actual earnings. So that is something to keep in mind. We do kind of sell off before then. That is normal. That is natural. So the next 2 weeks will be important, and we may get some big volatility. Again, you're dealing with some low volume as well. And again, tax loss harvesting, that's going to occur before the end of the year as well. So you got a couple different things in play to provide clarity. Let's get into the new year and then kind of see how things play out. So Tesla 34 points this week, so very high. Tesla's gotten some volatility again. I've talked about FSD. I've talked about humanoids. So that whole scenario there, I think, is starting to play out. I think you'll get one last big correction before that happens. How far down we will go, don't really know, but we will watch and see. But this, as far as this week, it's a short week, so Tesla is pricing in a lot more than normal. BA is back down to normal levels at 6, and then JP Morgan is almost down to normal, still high at 5. It's normally around 4, so the fact that it's at 5, I think over the next couple of weeks, these are wildly going to get higher, so it's important to know what they are looking at now. I would not be surprised if this jumps up to over 100. I would not be surprised if this jumps to a little bit higher. It's already pretty high anyway in general. JP Morgan or Boeing, I think, could adjust slightly by a number or two. And then JP Morgan, I think, is going to wildly jump up to 7 or 8, which is almost double what it normally is. I think is very much a possibility coming into this new year. And again, understand where it's coming from, that it's not just because of the current president in office. It's what's been going on over the past 2 years that should have occurred 2 years ago. The most anticipated recession never happened 2 years ago, and it's been prolonged. And the longer you prolong this, the worse it gets, because you've been artificially setting everything up to allow that to happen. And so again, these are all things you need to keep in mind moving forward. So again, we're dealing probabilities here, so take that with what you will. Make adjustments. Don't leverage risk when there's a high probability of things not playing in your favor. Just be patient, let it correct, take advantage. There's still some good sells out there. I'll show some sells tomorrow that are some good buys tomorrow, and then we'll kind of take it from there. So with all that being said, if you made it this far, go ahead and drop a like, and I will see you guys on the next one.